Hello and welcome to another update video. Today we want to cover Sandbox. I haven't covered it for a while, but I think it's time to talk about these metaverse coins as they are all dropping, more than they ideally should. I decided to do a little bit of a metaverse special here, so I'm going to cover in the next few days. I'm going to cover here Sandbox, Mana, Gala. I started covering a few days ago, and I am looking at Theta as well. So they are all sort of in that space. Theta not directly being a metaverse coin, but also certainly interesting from a structural point of view. And for me, it sort of belongs into that category of coins. So let's talk about Sandbox here today. Before we really go into the chart, I wanted to take a look at the Google Trends. Yeah, with Google Trends, this is where you can actually look at what are actually people looking for and searching for on Google. And we can see that the term metaverse peaked very much in January 2022. So basically 12 months ago. And we had a first peak in November. That was certainly related to Meta, Facebook's announcement, to rebrand and things like that. So you can actually see what such an announcement makes to sentiment, human sentiment. This chart looks pretty much like a crypto chart, doesn't it? Very, very much. But the reason for that is that it's all related to market sentiment, human sentiment. That is what makes these prices. Otherwise, you wouldn't really see prices of a crypto chart be very similar to Google Trends. It's crazy, but it is exactly how human emotion works, how a trend develops. You usually get a first spike and then interest fades and fades and fades until it eventually will pick up again. But then there is never a guarantee that it will pick up again. Yeah, this is the problem if we have a short chart history. So we're going to talk about that a little bit more on the Sandbox chart. But it's certainly interesting that here most interest comes from China, Singapore, Turkey, UAE and Hong Kong. So we are certainly in a space where the sentiment around metaverse is dropping. That, in addition to a situation where the positive sentiment in the crypto market is very negative, so that is not good for metaverse coins. Yeah. So where are we here now with Sandbox? So first of all, I want to take a look at this chart on the arithmetic scale. Then we switch over to log chart because we can see a little bit the subwaves a little bit better, and especially on the price increase here, and also because the price has dropped below a level that would be in any shape or form healthy for an asset. On the arithmetic scale, this chart has dropped below the 88.7% Fibonacci retracement. That's normally when I look at a coin, it's the first thing I look at. On the arithmetic scale, on the linear scale, is the chart still above the 88.7% Fib level? If a coin or any asset drops below that level, it means it might be useful for lower level targets to actually consider the log scale, because you don't really get any useful targets anymore on the linear scale for this sort of drop down there. Let's say it like that. You can get targets, but they mostly point to zero. The problem with that is if a coin drops below that level, that is true for any asset. If the retracement of any asset, and I come from the more traditional sort of markets, Forex, stocks and shares, because I've been doing this for around 14 years now with Elliott Wave analysis. And if, let's say, a stock would look like that, if a company's stock looks like that, that is when you see all the analysts grading down that stock. It is when you see CEOs resigning. It is when you see restructuring take place in a company. Now, in the crypto world, it doesn't really work like that. And we have two problems here. We've got the first problem that we still have with lots of these projects, sort of a lack of transparency. It's not a regulated space. We don't really know what's going on in the background. That's the first problem. The second problem is that it is still a very, very young and new asset class. So it might very well be normal that in a bear market, these coins go down 95, 96%. But from chart structures and human sentiment and what traditional markets suggest, you shouldn't really see that in a healthy market. Yeah. And that is why I always point out any coin that drops below the 88.7% Fib level, we get into problems here. I mean, if you look at stocks, even tech stocks, young tech stocks, when they retrace, look, Apple in the 80s, I always bring that example. Apple retraced in any of these strong retracements, also very much in the beginning, to around the 88.7% FIB level. So it didn't retrace like more than 90%. We have a lot of coins do that, and that is, in my opinion, not a sign of strength. It is a reason for concern. But we also had cryptos with a longer price history. They often dropped below that level and they then recovered in the next bull run. So it is, for me, a sign that we are in a very, very weak environment, that a coin that drops below that level, because not all coins have dropped below that level, but coins that have certainly have a problem with sentiment. It is a sign of weakness, and it is certainly not an environment where I would invest. Not without seeing a signal, yeah? This might be different as long as we are above this level, because there are still good chances of recovering. But when we drop below that level, it is an additional sign of risk and reason for concern. And without seeing a strong signal, I would stay away from these coins or markets or assets in general. That's not only about crypto, it's about assets in general. Yeah, as I said, let's say in the real world, in more traditional asset classes, this is where you would see people resign, you see restructuring, you see maybe companies go bust, you see companies go bankrupt, you see downgraded assets, yeah? So we don't have that in the crypto world. Well, if something happens in the crypto world, in an area of capitulation, in a time of capitulation in which we are, then you see exchanges go bust, you see projects go bust, you see projects get delisted. Well, we're not there yet with Sandbox, and I think it is a project that still thrives, and maybe only time will tell if Sandbox will recover. But we certainly want to take a look here at where we are in the structures and also on the log scale, because it gives us, in this lower end here, maybe some more realistic targets, and at least some targets that we can use, because here on the linear scale, I mean, all I can do now at the moment is to look at the structure. For me, this coin has done a WXY correction, or is in a WXY correction. It moved up in a wave 1, which is an impulse. It spiked in November 21. It's now coming down in a wave 2. In a wave 2. In a Y wave. And there's a few possibilities. I mean, I can count this as an impulse as well to the downside. So I could say we've got this situation, and that would be the more bearish option. That this is just an A wave, we'll see a B wave and come down once more in a C wave after all. And that means that in the next bull run, these coins aren't going to do much. They will recover to a degree, but they won't go to new all-time highs. And then they will come down in a C wave afterwards and then have another chance to recover. So I can count this as an impulse, and then this would be an A wave. Still part of the wave 2, but the wave 2 low would be delayed. So these are basically the two options for me from a bullish point of view. I mean, in terms of bearish point of view, this is going to go to zero. Yeah. So we are very close to that point anyway, compared to where we come from. So we don't need to specifically focus on that. Could very well be that we have some kind of a corrective wave pattern to the upside, and then an impulse down, and it can go to zero from here. Now, I don't suggest it's going to happen. Yeah, when you do these kinds of analysis, you need to have some kind of a bullish stance in general. Otherwise, you don't need to analyze the coin because it's going to zero anyway. But this is the roadmap that this coin can take to recover and go to new all-time highs, and to from a perspective of growth. So first scenario, which I find more likely, is the WXY pattern, which could be nearly finished. The other option is the ABC, which will come into place and become primary expectation if in the next bull run we're not going to see any movement here. Yeah, or we will see movement, but let's say, how much does a B wave normally retrace? So let's just base it on the current low, but maybe only into the region around 445 to 680. Yeah. So this is, or maybe not even above the 38.2. So the wider area that will become relevant for this alternative pattern is between 350 and 680. We will be able to specify that further as we're heading into the next bull run. But this is sort of where we are. And if we look at this, then we have basically a similar wave count to Bitcoin, where we're saying, okay, WXY. I mean, Bitcoin is a bit different, but we could say WXY. And we're now in a C wave here to the downside. This C wave could be an ending diagonal. So in a very similar shape or form to Bitcoin, we can say you know my Bitcoin analysis, we could say this was a wave 1, this was a wave 2, this here was a wave 3, this is 4, and there will be one more leg down in a wave 5. So as some kind of an ending diagonal descending wedge pattern in which we currently are. Quite a steep one, but we're heading now here sort of into the last, sort of phase of the downtrend. Now, looking at possible targets to the downside, this is not so easy on the linear chart now anymore, because we've dropped below the 88.7% fib level. But in terms of targets, we can look at the VRVP historical volume. So we can spot straight away that, and this is probably the worst case, that around the 10-cent mark, this is where all the historical volume is sitting. So this is certainly a massive area of support down there. So let's add that. Before that, the VRVP doesn't really help us too much, but we've identified a huge cluster of previous support and volume. Now, in terms of structural areas, you can see there seems to be quite a significant spike down there, 1, 2, 3 touch points, back here around 15 cents. So that is going to be probably a kind of support. Probably between 20 and 15 cents is a support area. So let's add that as well. Before that, I don't really see much here on this chart, but then we can go to the linear chart. It might give us a little bit more clues. The log chart, which I don't really like to use that much, but it gives us in the current environment probably better targets. So first of all, in the bullish interpretation, we can actually quite nicely see here how we can count 5 waves up on the Sandbox chart. 1, 2, 3, 4, 5. On the log chart, you can do it that way. Yep, and in terms of the subwave structure then, or let me just change here the... Let me just change here the subwaves. So yeah. And then for this wave 5 to the upside, we can also count the subwaves. So we have here a wave 1. One sec, where does the wave, I think here, yeah, 1, 2, 3, 4, and 5. So we've got clear 5 waves up. For this wave 1, yeah. So we've got that, yeah. And then here this WXY pattern down. What I like with this chart on the log scale is that it follows a nice channel. So you can draw a parallel channel here, which means that a breakout of the channel would be a strong indication that this downtrend is over. Yeah, this corrective price channel, which would be a break above the, let's say 65 cent level. So above 65 cents, we could possibly make a call that this downtrend is over for now, yeah, initially. Okay, but what are targets now to the downside? So we can very nicely see that on the log scale, we see a strong support area down here around 15 cents to 20 cents. This is in line with the previous wave 4 support, so a strong support level. We often hear, and that's part of Elliott Wave education, that a wave 2 correction of a higher degree, that a wave 2 correction of a higher degree finishes around the previous wave 4. So that would be at 15 cents. This would be personally, from the bullish point of view, my worst case, because there are some targets before that we can look at and explore. So if I understand this as a WXY correction, WXY, then, and this only works on the log scale, so because I get a below 0 target on the linear scale with that, and therefore I get a bit, in the current environment, this doesn't really help us much. So we can take the wave W length and go to the high of the X wave. And then the very first target would be the 61.8% extension. That's at around 33 cents. So when we get to the 33 cent level, this is a reason to watch out for, yeah. And this could be a target to finish off this correction. We can see here nicely also the descending wedge. You can draw it a bit differently on the log chart, yeah. And we could say that if we are now in this fifth wave, an ideal target here would be that 61.8% extension, the 33 cent level. Now, if we break that, then the next target would be quite far down. And we talk about this previous wave 4 low, but it's very close to the 1-to-1 ratio, which is another ideal target for a Y wave. So that would be my second target. So either 33 or basically 12.8. Well, or let's call it the zone between 12.8 and 15.8. Yeah. I mean, you could even say it depends on how high we want to go up to. I mean, on the log chart, we can do it a bit more. It's a bit clearer here. Let me just move that accurately here. It seemed like, on the linear chart that we have an area of support here where those candles closed and everything. Maybe we take it out on the log chart. It doesn't feel like on the let's go back to the linear chart. Well, it is where those candles closed, Oops. It is where those candles closed here back in 21. So what I'm gonna do, I'll leave this zone in, yeah, and I'll highlight it as another zone of support on this chart. Basically between where this dotted line starts, which I've now moved to 21.8 cents. This is not really strong support up there, I guess. It's more here around the wave 4 low, which is at 14.8 cents, if I draw it accurately, and the 1-to-1 ratio at 12.9 cents. So we've got basically a few targets here to work with that we can certainly put on our chart, that we can watch out for. Again, first key level is that 32.7 cent level, around the 32.8 roughly, yeah. This is the 61.8% extension. That would be my first target that I can give you for Sandbox to have a chance to turn around. If we drop below that, it will be this area between 21.8 and 12.8 cents, between sort of this structural support and the 1-to-1 ratio. And we'll probably be able to specify that a bit further when we get a bit more advanced, have a bit more clarity about these subwave structures here. But it tells you basically that this downtrend is probably not over yet, that we have a chance to find support here, then here, and then this is sort of the last major area, which goes basically to zero, we have to say, yeah. So this is really like the last resort down here. I've only highlighted it because it is the area that on the linear chart shows a lot of historical volume. So and this is where we currently are with Sand. So I guess time will tell. The summary basically would be that we have dropped too much to talk about a really healthy development of a chart and healthy asset. So for me, I wouldn't buy this until I see a strong signal. Yeah, I wouldn't invest in a coin that has dropped so much without seeing a strong reversal signal. That would, again, as per Elliott Wave, we would be looking at 5 waves up, 3 waves down. As always, yeah, that is how we Elliott Wavers believe we can recognize a trend change. 5 waves up, and it doesn't need to be on the time frame. A lower time frame signal would work. 5 waves up and then 3 waves down, and then we have our first signal. However, as you've just seen on the chart, we see mainly red candles at the moment. There isn't really anything that gives us a strong clue here about this has ended or something. So only red candles. We hit support here on this wedge pattern, which again looks a little bit different on the log chart, a little bit different on the linear chart. But certainly it is some kind of a wedge pattern here, ending diagonal pattern, which we can follow. And as per the linear chart, we're getting close into an apex here. But yeah, no reversal signal yet. So I'm going to keep focusing on this for you. We've identified targets here, not where guaranteed in a guaranteed way the bear market will end, but these are sensible. These are valid targets as per Elliott Wave, Fibonacci extensions that prices often adhere to. And we will see how the price is going to react to each of these price levels. And then if it recovers, we need to observe in the next bull run if we are only in what I told you, only in a B wave, or if we indeed are on a way to new all-time highs in an impulsive wave. And I gave you a target for a possible B wave to the upside, which would then result in another C wave down, or we can also talk about an all-time high target. Now, again, this is only if it really recovers in a bull run and makes all-time highs. So just roughly, it would take us into the region above $14. The 1.618 extension, yeah, is in this wave 3 then, realistic, at least $14, $17. This is sort of the range. Then we should get a wave 4 correction, which should be shallow, and a wave 5 to the upside, which can take us all the way up to $22, maybe even more. So there's a bit of a moon count, certainly realistic in a new all-time high scenario, but for that, the coin first needs to recover. So I can't make a final call, is this coin dead or not? In a traditional market, I would say, yeah, definitely, yeah, or with a lot of luck, this asset will recover. In the crypto space, it is certainly a reason for concern. But on the other hand, it is a very young chart, a very young asset. We don't have that historical data that will give us evidence that coins that drop below that level are most likely going to die. Many did die, that is fact, many coins in the past, but we need to see how do strong projects behave in that environment, so that in the future we will have more reference points. So it is a bit of an unknown, but it seems like that many coins also did recover. For example, ADA also dropped below that 88.7% fib level in the last bear market, and it did recover. So time will tell. It is all about the structure it's going to develop in the next bull run that we will focus on, and then we can make calls. Are we actually in a B wave only and will come down again, or are we in a wave 3 and will go to very, very high prices? So hopefully you liked the update about Sand. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. If you're interested in learning more about technical analysis and trading, maybe check out our trading course on the website, morecryptoonline.com, and follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.